Greetings everyone, welcome aboard. Joseph James, schooltrade.com, August 5th, 2010. Welcome to our live trading recap. Guys, another great day in the room today, guys. A much easier day than we had yesterday, I must add. And before we took the trades we took today, guys, I want to remind you 4 important things in the blog. Remember, search box at the top. You can search for any topics you guys want. We have live support below it, 24/7 live support. We've got your YouTube, your Facebook, your Twitter, guys. Don't forget, our YouTube page has lots of videos you may never seen before. So head to the YouTube page, and then below the YouTube, you've got follow me, right? You want to follow this blog, guys. Now remember, this morning we posted trade calls, article on tape reading last night. We posted 2 videos this morning on the blog, guys. If you're missing out on the videos, the articles, the trade calls, guys, it's because you're not following the blog. So make sure you guys are following the blog, and don't forget, if you can't follow the blog, just sign up for the newsletter. We always send out emails to our newsletter list, letting you guys know when things are being added on. All right, guys, so use the blog to its full potential. Now, we had a pretty good day today. We didn't do a lot of trading today. We took 3 trades. All 3 were winners, and all 3 were on the euro. They were all the same pattern, too. So we actually had a real simple day today. But we actually had a lot of things going on, but all we ended up doing was taking the euro. Now, the dollar gave us a little bit of a heads up today. We'll talk more about that in a second. As you can see, though, $905, 82 ticks. Of course, everything on the euro is 12.50 per tick. So we got 57.35 for the week. That, of course, is also our monthly total, and we now over 112,000 here, guys, in the room since the beginning of 2010. So we're making a great month here, guys, of August. It's a slow summertime month, so we're doing our best with the market that's given us to us every day. And of course, we know volume will be an issue. We know summertime trading. We know volume is always going to be an issue. Okay, we know we have to be more selective. Okay, we know that we're not going to take every single trade that comes our way. We know we're going to have to be a little more selective in the month of August. All right, and the biggest thing we talked about yesterday in our webinar was that we have to wait for our trades. All right, now come fall or in the spring, right, basically anything else besides the month of August, okay, 99% of our trades will be winners. Okay, we have a high percentage of winning trades. But in the summertime months, that percentage is brought down because of inconsistency that comes with the lower volume. So we want to wait for our trades and nothing else, right? No high risk trading going on in the month of August. Now we saw the dollar moving early this morning. That got the currencies moving for us. The crude oil this morning had an inside day on crude, so that kind of kept us contained on crude. And we noticed we had a channel on gold, but we were going sideways and sluggish on gold. So the euro was basically the big story today, and it was all made possible by the dollar. Now before we talk about the euro, let's talk about the gold and the crude here, because we obviously spent some time this morning looking at both of these markets. And what you can see here on the crude is we have this sideways range. Now, of course, as you guys know, we know how to trade sideways range, right? Here's your range high, there's your range low, right? We're going to sell these highs, we're going to buy these lows. But guys, what do you notice though here? What do you notice though when you look at this stuff? We're right in the middle of the range. Now we call this an inside day. Because you can see here, here's my range from yesterday, and here's my range today. And so what can you tell from that? I can see here that we, of course, have all this room between the extremes from yesterday and today's extremes. Okay, so we call this, like I said, an inside day. And we call it an inside day because it's inside of the trading range from yesterday. Now, what is an inside day telling us? An inside day tells us that the market participants do not have enough confidence in the direction of price to push the highs or push the lows. And so what ends up happening is it just sits there. And so an inside day tells us a lot about what to expect. Because think about it. If there wasn't enough confidence, in other words, if we don't have the sense of direction to test the highs or test the lows, then that means the majority of the time this market's going to be sitting there sideways. So inside days are always going to be a look into the future, right, for what is likely to come the rest of the morning. And of course, we really didn't get very much on crude today. We had a bunch of patterns, but we didn't get anything that really set up fitting our rules. All right, guys, so inside day, that gave us a real heads up, of course, what was coming soon thereafter. Now to gold. Now on gold here, we actually saw kind of an interesting situation here on gold. Now you'll notice on gold here, we have this channel. Right, and there's my channel high, and there's my channel low, right? So we have this upward trending channel here, right? So you can see that upward trending channel. Now, inside of this channel, of course, we all know we can, like any other sideways range or wedge pattern, I'll look to buy the lows and then look to sell the highs, right? So buy the lows, sell the highs of the channel. Well, this information here now, knowing we had a channel, but we also noticed another thing here, and that was we had a sideways range. And that was right here. Here was the sideways range. And we marked it up here with this yellow line here, right around 96 even, right? 1196 even. Okay, so we noticed we had a sideways range, and we're inside of this channel up. So, of course, at this point now, we've got a couple different options here. Let's clean this up. The first option here was what if we come down. In fact, let's draw this thing out here. Here's my sideways range. All right, and here's my channel. All right, just like that. Okay, so what the idea here is that we're going to come down. Right? If I can buy these lows right here, that's going to be the highest percentage trade. Okay, because I'm buying the low of the wedge and I'm buying the low of the range, right? The low of the wedge and the low of the range. So that's the highest percentage trade we're going to see on this market. Okay, now another thing we can look for here is if we do break to the downside, right, I can look for a breaker pattern short. Okay, that will be another high percentage trade. Okay, so the two high percentage trades here were buying the lows or selling the break of those lows, which of course would be selling the highs below the wedge or below the channel. Now, to the upside though, we really didn't feel very confident going to the upside. Okay, because of course if we break above what was 1204 half right here, right, there was resistance here. If we look for a breaker long here above 04.5, we're going to be, right, buying into the high of this channel, right? And that's not the best idea. Right in the middle and then buying into the highs. Not the best trade here. Okay, so basically again, like you're seeing here, the two higher percentage trades will be the two-step pattern long, right? Buying the low of this. Okay, the breaker pattern short, selling the highs there. All right, and then of course we're going to stay away from the buy side above 1200. We're in the middle and buying the highs, right? That's a no-no. So what I'll do is I'll look for a two-step pattern short at these highs, right? So rather than buying on the way up, I'm going to wait to come up and test these highs here, and then we'll look to take a short, right? So we'll wait for it to come up, test it, and we'll look to sell short at those highs. All right, so two-step long, breaker pattern short, two-step pattern short. We didn't end up taking any of these trades today, but I wanted you guys to see, though, what the diagnosis was here, knowing what we see in front of us. All right, now gold, of course, still was pretty low volume this morning. We're still waiting for gold to kind of catch up to speed for us here. But the real money we made today was in the euro. Right, now here we have in the euro now, my left side of my screen here, the left side, it's my 34 range chart. And so, of course, that's my slowest time frame. And now look right here, guys. Look right in here. Right there. Okay, now what do you see right there? Well, first thing I see is that we've got a trend line. And that trend line, I can tell, is providing overhead resistance, right, for this price. I also see an opportunity right there for a breaker pattern short or a swing low, right? So here, what number is this? 3179. So we'll say 3180. All right, 3180. So 3180 on my slower time frame, that was what we determined to be a good potential entry here going short. And now let's see what happens. Over on the right side of my screen now, this is my 13 range chart. One of my favorite charts to use. And what do we see here? A wedge pattern, right? Your typical wedge pattern. We have no problem trading wedge patterns. We know exactly how to trade wedge patterns, don't we, guys? We're going to sell these highs, and we're going to buy the lows. Now, what was that number again? 3180. There it is, right? There's 3180. Okay, so what happened was we simply waited now. We're going to sell the highs, right, of this wedge pattern. There's